Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar has lacked direction overnight, which in terms failed to indicate direction for the intraday assessment. However, from a technical point, that the dailies have broken down from the RSI point, but we still need to see the direction from the MACD to marry up the two indicators to initiate further bearishness. A break beneath 69.35 should trigger the market sentiment to a bearish case and therefore expose a region of 68. Later today is the Westpac consumer sentiment, and more importantly is that we have the China to release its CPI and PPI very soon. Along with that, tomorrow we have the Australian employment data. Now, for those trading the Australian dollar pair, this will be a high-level event risk to monitor after the RBA cut rates from 1.5% to an historic low of 1.25% last week. This is the first move in almost 3 years. Now, the reason why I say we should monitor this is the RBA, Phil Lowy, said last week that the move for a cut in rates with another 25 basis point on the cards would help reduce unemployment and boost inflation back to around 2 to 3% target range. Dr. Lowy also said it is not unreasonable to expect that the interest rates will be cut further this year. So from a technical point, I am bearish. But as I say, I would like to see a little bit more conviction in terms of the technicals. The dollar index is still posing a threat to the downside, with the key level seen at 96.40. If it does break there, then we are looking down towards 95.40. This, on the flip side, will see further stop loss triggering on the euro and target the range of around 113.8090. From a technical point, we still are at risk for a move up. So if you are trading, I would wait until at least up towards that 113.8090 to start shortening the market. Dollar yen hasn't stayed any significant moves over the last handful of days, and as you can see, the market is still capped by the resistance of 108.7095 and the support holding at 107.8595. We do at this point need to see a break above this level of 108.7095 to trigger the move up towards 109.75 to 85. But from a MACD and looking back on the pattern is a little bit concerning that we may not get this. But still, let's see if yen does weaken and the US dollar does strengthen. The pound is slightly more to the bullish case. Now, overnight, the market was unexpected to find that the UK jobs forecast helped with the average earnings coming in at 3.1% with a forecast at 2.9. Crushing this forecast has given the market a little bit more interest in terms of buying, and now we need to see a break above 127.60 to get the move up towards 128.2035, which is where I view before coming out with any call to shorten the market. The gold did take a stab to the downside at the 1,324 mark. Briefly posted a low of 19, did stage a recovery, but not the best, I would say, to get the market out of the bearish trenches. If we can see the further rise today, then we would see a move up towards 31 to 35. Let's see if the market can hold above 1,324. Wrapping up with the oil, the market is breaking down again after losing momentum from around that $55 handle. It is looked upon now that we could see a market to 52 to maybe 51.5. However, support is still holding firm from $50 a barrel. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoyed the great start to this new day.